What's up, everybody? Today we have a value legend with us here, Manish Pabrai, um, Chief Investment Officer of Pabrai Funds, sitting somewhere in, I think, sunny California. um, but, Manish, it's great to have you on the SumZero YouTube channel. Obviously, you've been a SumZero member forever. I remember reading some of your Japanese nets back in the early days, but wanted to chat with you about your investing framework, your investing philosophy, a little bit more on your background, and then of course, as is SumZero tradition, to get a few actionable ideas from you on some companies that you think fit within your broader investing framework and are things you actually own. So with that, thanks again for joining us. I think this is going to be very educational. Can you just tell us a little bit about how you got into investing and what sort of drove you to it? I know you have an engineering background, but what was that transition to investing like for you?
Yeah, so actually, Divya, it's a pleasure to be here, and I'm delighted to be part of the SumZero community. It's been wonderful and profitable. So I think you do a good service
I'm glad to hear that.
to the community. I really like the site and the offerings. I get a lot out of it, so that's wonderful. Uh, my investing journey was really kind of accidental. It wasn't planned. So I was running a IT services business. This is probably around 27 years ago, and I was vacationing in London with my wife and looking for something to read on the way back, and I picked up one of Peter Lynch's books for the flight back, and I really enjoyed it. And then I read his second book, and then I was out of Peter Lynch books, and I wanted to keep going. And he talked about this guy Buffett in reverential terms in the book, and I never had heard of Warren Buffett, and so I poked around, and that opened up like a huge new universe for me because the first few biographies on Buffett had just been published, and the Berkshire Letters and so on. And what I realized, I went through about a 2-year period when I went through a lot of reading on Buffett, Munger, Graham, and so on. And what I realized is that what they were saying was essentially what I would call the laws of investing, which I would say is kind of like the laws of physics. There's no 3 different laws of physics. Physics works one particular way. And what I found peculiar at the time was, I'm an outsider looking into the industry. What I found peculiar is that basically um, most of the practitioners in the industry, not only did they not follow these laws, they didn't know what they were. And I mean, like, so let's say, for example, one particular law would be on, number of positions, for example, right? And so Buffett says it makes no sense to put money into your 25th best idea versus your third best idea. But I looked at mutual funds which had 200 ideas, and they were 100% annual turnover.
Right.
And so there was just I just saw it. I didn't know much about the hedge fund industry then. I could look at the mutual fund industry, and I said these guys managing large pools of capital don't seem to follow what I consider the laws of investing. And so my theory at the time was a yo-yo like me could follow these laws and should run circles around these guys. And so uh, you know, uh, I think someone once said, an idea is like an asshole. Everyone has one. So ideas without execution don't mean much. And if I have these theories I'm espousing, they don't mean much. So I had sold a portion of my business. I had about $1 million at the time. So I said, okay, I'll apply these laws of investing. I'll take this 1 million and invest it. And I want to see what I can do versus the guys who don't follow the rules. And
Can you, I mean, I don't know if you can say this, but what have your kind of long-term returns been since that first foray into value investing?
Yeah, I mean, I think you have to split it because I haven't done it in one chunk. We could probably do it maybe on the fly here. But I mean, if I look at the period from 94 to 99, when I was a individual investor, I didn't have a fund and so on, that 1 million became 13 million.
Oh,
It was like, 60, 70% a year.
and was that using a pretty concentrated,
Yeah,
I'm
actually,
assuming your portfolio is pretty concentrated at that point?
the approach I used then, which is the approach I use now, was what I call a 10 by 10 portfolio, which is if I'm making a bet, ideally I want it to be 10% of assets.
Got
And
it.
but now what I do, I think on my personal side, is I rarely have more than 3, 4 positions. So the funds still operate with this 10% type allocations, but personally, I feel even that is too much. And so in my own portfolio, there usually not be more than 4 stocks.
Yeah, you could, I've thought about this myself, but it's almost like the more wealth you accumulate, the easier it is to take even more concentrated bets. Um, because it doesn't necessarily affect your lifestyle so much, or you have the luxury of being able to almost time arbitrage in a way that a lot of funds can't if you feel strongly about a specific position.
Well, I think that there's two schools of thought. One is that if you are wealthy, many wealthy people focus on preservation. They don't focus on growth; they focus on preservation.
Right.
And if you focus on preservation, then you would just index or something. Just you'd have a broad diversified. Because generally, one of the issues is any number multiplied by zero is zero, no matter how
Right.
large the number is. And so there's a balance, there's an art and a science in the sense that you don't want to be, going from nothing to 100 million and then all in on, some leverage bets or something and blow up.
Right.
So I think there's
That's
a balance.
the Bill Huang model.
Yeah, we
Right there.
don't. I
Yeah.
mean, that whole thing makes no sense to me.
Yeah.
Uh, but like Mark Twain said, uh, why should fiction has to make sense, but real life doesn't need to.
Right.
And so basically, I mean, I think some of those things don't make sense. But yeah, I mean, I think in general, I want to be concentrated. But I also want to make sure that the risk levels are low.
Got
Uh,
it. What's your you mentioned turnover at mutual funds being arguably way too high.
yeah,
You could argue a lot of that is also true in the hedge fund community, but what does your typical turnover look like in your fund and also with your personal assets?
it's now going down a lot than even where it used to be. Usually, it was typically probably the portfolio would turn over every 3 or 4 years, maybe 20-25% annual turnover.
Mm-hmm.
But I can see now with some of the changes I made last year that those will stretch out. I mean, basically, they're things that I would not be selling for a very, very long time.
Got it. And I'd love to talk about some of those names. But before we get to that, you're obviously very famous for this lunch you had with Warren Buffett. He's almost the symbol of long-term compounding and sort of patient investing. What was your biggest takeaway from that conversation? That you can share with us.
Yeah, I mean, I think the lunch was wonderful because you could give Buffett a bribe and have a meal with him, right? And you can still do that. He takes bribes.
Yeah.
Can't quite do that with Charlie Munger. He doesn't quite take bribes to have a meal. So I felt like, if you were living in the time of Newton or Einstein or Gandhi, and you had a chance to meet these guys for lunch, would you do it? And answer is absolutely, you would do it. And so I felt like he's available. The price tag at that time wasn't that high, and I had made all my money using his intellectual property. So I felt like I a tuition bill. And so for my point of view, I just wanted to thank him. My objective was to thank him. Warren comes to these lunches with a completely different mindset. He comes to these lunches with a mindset that whatever the person has paid, they're going to walk away thinking they got an incredible bargain. Okay. And so I've had lunch with other celebrities, other CEOs who are very prominent, etc. Um, they will meet in the company cafeteria, they'll watch their watch, and 45 minutes later, they're
And they're
gone.
gone.
Yeah.
Right.
And then,
Right.
what I'm saying, there's nothing going on there. Warren came to the lunch at Smith and Wollensky's in New York, and first thing he said to us is, I have nothing going on all afternoon. Okay. So he said, I am here for as long as you want me to be here. When you get sick and tired of me, you let me know and I'll leave. Okay.
Yeah.
So the lunch went for about 3 hours, and it ended because we ended it. Okay.
Right.
Not because he said, I got to go. Okay. So he was very relaxed. He wanted to share and provide as much value as he could to us. And, I was
Sober
addressed.
the whole time.
Pardon?
Sober the whole time.
I'm sorry, repeat what you
Was
said.
he sober the whole time?
Oh,
This
yeah,
is
yeah.
like,
He doesn't drink alcohol at all.
he's
I mean,
not an alcohol guy. Yeah.
it's just cherry Coke, that's it.
Cherry
So
Coke for 3 hours.
yeah, cherry Coke. And actually, Warren doesn't eat or drink anything that he did not at the age of
Invested. Yeah.
at the age of 5. His diet from the age of 5 to the age of 90 has not changed.
So cherry Coke and See's candy. What's his main meal?
Well, I think
burger?
I think he has his steaks very rare, so
Uh-huh.
he's partial to the T-bone, and then he would like hash browns or fries with that, and with a lot of salt on it, and
Yeah.
and with the cherry cokes to wash it down, and
Right.
yeah. So the lunch was wonderful, and so when I went with my daughters and my wife, and Guy Spear had come with me with his wife,
Mhm.
and I was addressing him as Mr. Buffett. Mr. Buffett, this, and then both my daughters are sitting on both sides of him. They were like 10 and 12 years old. So he tells them, "Listen, kids, if you call me Warren, maybe the grown-ups will learn to do that too." Okay, and so within 5 minutes, you feel like you're having lunch with your grandfather. He puts you at ease. You forget you're with this, amazing investor or whatever else. And then he would take any question we'd ask him. And he does this at the annual meetings as well. It's what I would call taking lemon questions and making them into lemonade, right? So if you watch the Berkshire meetings, any question anyone asks, they always have a great answer, no matter how stupid the question is, and so he was very focused on trying to add value. And so, for example, one of the questions I asked him was, "Look, Warren, when you guys started out, there was Warren, Charlie, and Rick Guren. There were 3 of you, and in fact, like when they had done the Seas deal and blue chip stamps, etc., Rick Guren was pretty prominent. And then later, it was just Warren and Charlie." So I said, I haven't seen anything in the public domain about Rick since the 1970s. And so, where is Rick? How is Rick? Are you in touch with Rick, etc.? Right? So he says, yeah. Rick and I are in touch, and we play bridge all the time. But then he said that in 1973, 74, when there was a huge crash in the market, Rick Guren was levered. He had a very sensible portfolio, but he had margin debt, and it was the 73-74 crash was worse than the 1929 crash. It was just in slow motion over 2 years, but it was pretty intense. And so Rick got margin calls, and Warren said uh, that basically he bought a lot of Rick's Berkshire shares at $40
Wow.
during that time, which is now over 400,000.
Right.
And he said that he says, Charlie and I always knew we were going to be very rich, but we were not in a hurry. He says Rick was in a hurry. Okay. And then he said that if you are even a slightly above average investor and do not use leverage, you cannot help but get rich over a lifetime if you just spend less than you earn. I mean, just the math of compounding will
Right.
get you, right? So the thing is that he converted a question about, hey, where's Rick? into a lesson on leverage and how to get wealthy, right? And that was one of the, I was not using margin or leverage or anything, even when I met him for lunch, but it seared in me not to go there. It just seared that lesson in. So there were things like this which he's mentioned many times, but the way he articulated it, it just really kind of hit home. Another time we were talking about this concept of inner scorecard and outer scorecard, right? So he says, would you rather be the greatest lover in the world but known as the worst, or would you be the worst lover in the world but known as the greatest? And he said, if you know how to answer that question, life is going to be pretty easy. So Warren has a very intense focus on inner scorecard. He measures himself by an internal metric, not by what the world is saying about him. Oh, you're great, and this and that, or whatever else. So he uses an inner scorecard, inner metric, and it's an incredible mental model to use as you go through life, because it makes it pretty easy, because it makes it easy to shut off the noise or not get rattled, or what I find is like I meet people who are very negative on Gandhi, for example, okay, or I'll meet people who are negative on Buffett and negative on a number of different uh, individuals that we would consider heroes. And so what I realize is with humans you cannot get rationality. Okay, humans process things in weird ways, and so the inner scorecard is really important. So like for example, the guy who was telling me all this negative stuff about Gandhi, my response to that was, well, this is a person I don't need in my life, and I don't need this type of input coming at me. So I moved on from there, right? And so it just makes life a little bit easier. So I
Yeah,
think
and
the lunch had a lot of take home value. I think we probably I'd made some notes later. We had like 60 questions we asked him, and he was just very forthcoming. Like I asked him, Mr. Buffett, who would you like to have lunch with, living or dead? Okay, he said, I really want to have lunch with Sophia Loren. Okay, and yeah, he's been a big Sophia Loren fan for a long time.
yeah,
Okay, and then he said, no, 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 scratch that. Actually, what I want to do is I want to meet Newton for lunch. Okay, I said, why do you want to meet Newton for lunch? He said, well, Franklin was the wisest, but Newton was the smartest, right? And he said, obviously, Franklin with the wisdom, trumped Newton, and Newton got taken out with the South Sea bubble, in the big bubble that they had in the 17th century. And so he said, it'd be interesting for me to understand how a mind that creates calculus, it gets, swayed away and loses all his money on this stupid bubble that's going on and can't see it.
yeah. I was going to say Buffett sounds like a guy who is arguably less susceptible to FOMO than the rest of us. There's a degree of discipline that I think he has, because the funny thing about Buffett is that his framework is conceptually very easy to understand. It's almost basic. I mean, in some almost too basic. Like anybody can. I think if you told the average person that it's a virtue to be patient with investing and to search for asymmetric opportunities, right, where there's some sort of disproportionate gain versus a small amount of risk, like they'd be like, yeah, that makes a lot of sense.
Sure.
But in a world where there's a lot of noise and a lot of uncertainty, um, and a lot of FOMO that I think may be perpetrated by the media at large, people get off track and they just miss the forest for the trees entirely. Whereas he seems to be, he invests in what he knows, he sticks with it, he doesn't do any day trading, obviously. And when Mr. Market gives him an opportunity, he jumps in, and
Yeah, I
when a
think
lot of other people don't.
Alice Schroeder mentioned this in her book. I think that when Warren was a kid and he used to walk, he'd walk with his knees a little bit bent forward. And the reason he did that was because he did not want to fall. So he kind of changed his walking to reduce the probabilities of falling. We normally don't fall. most of
Right.
us walking around, we don't be following all of this. So the thing that people miss when they read stuff about him is the intense focus on downside protection.
Right.
Okay, so I have sent Warren stock tips, and he studied those companies, and then he hasn't invested in them, etc. And it's because some small thing here or there is bothering him, right? So the thing is that even now, if you look at Berkshire, there's 140 billion sitting in cash. He will step up to the plate and not have a problem putting 100 billion on a single bet. No problem. He wants to do that, but he is not willing to do that where it's not a cinch, right? He absolutely, like when they made their investment in Burlington Northern Railroad. He bought the whole thing, I think, for like 40 billion or something, and I think now it's probably worth like 4 or 5 times that, maybe 140, 150 billion or something. And they've given, I think the dividends they've collected has exceeded the purchase price.
Yeah.
Okay. But the thing is, he looked at that transcontinental railroad and looked at the replacement cost of building that, right? So he brought up that California was doing this high speed rail, and like for 2 or 3 miles of the rail, it was several $billion. Okay, now it's high speed and it's a little more, but he said we have 28,000 miles of track. Okay, so just look at that 28,000 miles of track, 40 billion, and you're spending few $1 billion on 2 miles of track,
Right.
and so and those rights of ways, so if you look at the Burlington Northern purchase and you fast forward 100 years or even 200 years, so we may not be using rails, okay, but the right of ways will persist. So they own that land and they own those rails. So if we go to maglev, for example, or some other technology,
Hmm.
it's difficult to imagine a situation where Burlington Northern 100 years from now is not more valuable than today. So it was like, it's one of those things where it's the same with the Coke investment and so on. So they really kind of look at these things where you've got a, asymmetric upside, but really what the focus is on is every which way, how do I protect the downside?
Right. Which is, I guess, part of the philosophy of the Dhandho um, investing approach, right?
Well, everything's coming from the Messiah, so no surprise that that's where it ends up.
Yeah. And what was the story that about the name of your firm? It's a Gujarati term that
Yeah,
refers to a way of doing business.
yeah, I think Dhando is a Gujarati word. The direct translation is business, but the what it really means is a approach to business where the downside is very muted and the upside is great. So it's really more than just saying
Yeah.
business. Like when my Gujarati friends are saying, in fact, I had a Gujarati roommate when I was in college, and he described different business models to me. He said, Monish, Dhando. Okay. And that was it. That word was enough to explain, because he used to disappear on weekends, and all his uncles, everyone had motels and laundromats and gas stations, and he'd come back on Sunday night and he'd be talking about some new deal some uncle of his has done, and, buying some motel, and then go through the economics with me, and then he'd say, Monish, Dhando, like this was a total no-brainer, you
Yeah.
know.
Yeah. So on that note, what is your screening mechanism? I mean, do you have screens set up? I mean, obviously you're using SumZero as one kind of screen for ideas. Do you, I mean, like, do you have a go-to, call it, valuation screen, or is it just kind of, as you read stuff in the news and as you get, information from a variety of sources, you find stuff where you see like a Dhando opportunity that's just a no-brainer? How do you actually screen for these ideas?
Yeah, so I don't run what you would call mechanical screens,
Okay.
and the reason is that businesses are so different from each other. There are businesses with no book value that are very valuable. There are businesses with 10 times book value that are very valuable. There are businesses with 100 times book value that are very valuable. There are businesses with 100 times book value that are very valuable. And the reason is that businesses are so different from each other. There are businesses with no book value that are very valuable. and there are other businesses where book value matters a lot. So
Hmm.
there's just a range of stuff, and there's businesses like Amazon where you won't be able to see it in the numbers. Any numbers you look at with Amazon will not make any sense for you. It will not show up as a value stock.
Well, it's kind
Where
of like the Burlington Northern Santa Fe. How do you value the
Yeah, exactly, or
track, right?
Coke or whatever, right? So you have to. I think with business, it's a combination of qualitative and quantitative, right? So you have to look at both. So I don't look at screens. What I do is I do read the write ups. So SumZero, the write ups. Uh, I'll, or even like on Value Investors Club, or sometimes people send me ideas. So my point of
Hmm.
view, what I'm trying to do really quickly is understand, is this a great business, and is there like an asymmetric, and what is of no interest to me is some stock trading at 15 and people writing 300-page thesis of why it's worth 20. Okay, you lost me already. So
Right.
if you tell me something's trading at 15 and it's worth 50, now that's of a little bit more interest. And so the first very quick screen I'll use is kind of, what does the upside look like here, right? I mean, the guy who's bullish on this, what does he or she think is the upside, right? And if I can't see that the person promoting the idea doesn't have a great upside, we've done
And
most
for
of it.
you, is that a 3x over 3 years, a 2x over three?
Well,
What's your?
it's changed. I mean, it used to be that I wanted to at least have a double over 2-3 years,
Mhm.
and more. But now what I'm very interested is I just want the long compounders.
Yeah.
So I want to basically be able to see a very long runway, and a valuation that somewhat makes sense, and a moat that's very very strong and can endure. Very few
Right.
things moats like Burlington Northern, right? I mean, that's a very long term enduring moat, but where we can see that there's quite a runway with a muted downside. Yeah, so those would be of interest. Yes.
Yeah. Um, we had talked earlier. Where are you seeing value right now in the markets? And there's so much fluff in the markets today, it seems. So um, let's talk about a few names that you think buck that trend and are actually uh, trading at a meaningful discount to intrinsic value. Um,
Well, I would say right now, if and I'm hoping to make a trip soon, but I think that uh, the country that is of most interest to me in terms of value is Turkey, and there's a number of reasons for that. So first of all, the currency has, for practical purposes, collapsed.
mhm.
It used to be like 3 Turkish lira to the dollar about 3-4 years ago, maybe 5 years ago. Now it's approaching 9. So it's moved a lot, right?
Yeah.
And the other thing is that um, foreigners and international institutional investors, for the most part, have completely exited the market.
Hmm.
So everyone and their brother has left. And the third is that um, the the local investors in Turkey um, have have an unusual nuance, which is actually very favorable uh, to people like us. So one time when I was in Turkey, I was meeting the CFO of one of the largest groups, a very blue chip, GE type group. Well, GE is not blue chip anymore, but maybe like a Berkshire type group in Turkey. Um, and this guy says to me, he says, he said, Monish, every country has a national game. Like he says, like, in Russia, the national game is chess. In the U.S., it's poker. In China, it's baccarat. And so he says, "Do you know what the national game of Turkey is?" So I said, "Why don't you educate me?" He, he says the national game of Turkey is backgammon. Okay,
Huh.
so he says, "Look, chess is pure skill," and he says poker is skill and luck. And he says baccarat and backgammon is pure luck. There is zero skill. And
Yeah.
the Turks are crazy. I mean, they have these parlors for playing backgammon, and they just want to while away their days just playing backgammon, right? And so he says that people don't talk in Turkey about investing in the stock market. They talk about playing the stock market. So Turkey is very unusual in the sense that the holding period for stocks amongst retail investors is in either a few hours or at most a few days. So 80% of the market cap of Turkey is either owned by insiders or foreign institutional investors. Only about 20% is kind of, let's say, float that is available to retail Turkish investors and maybe institutional Turkish investors. Both groups are hyperactive, and the thing is that Buffett has a quote that the stock market is a mechanism to transfer wealth from the impatient to the patient.
Mm-hmm.
Okay, and so when I'm looking at a business in Turkey and I'm looking to buy shares of that business, the people I'm buying it from do not understand the value of the business and they don't care about the value. What they're concerned with is if at 10 a.m. I buy this for 20 Turkish lira, can I get 23 by 4 p.m.? Okay. And if I can get 23, that's great. And I'll go and buy that. And if you tell me I'll get 23 in 2 years, well, I'm not interested. Right. And so the thing is that the trading volumes in Turkey are through the roof. It's amazing. The liquidity of the markets is incredible. Like I would look at some companies which are 80, 90% closely held. Okay. And the 10% that is floating is turning over every 10 days. Okay. It's like, it's an orgasmic market for people like me to participate in. It's like what Buffett says. He says that it's like playing bridge with someone who's been told it does no good to look at the cards. Okay. So if you look at a market like Turkey, so now there's a lot of reasons why people don't want to go to Turkey. Okay. But let's say if I look at the Coke bottler in Turkey, for example. Okay. So
What's the name of that business?
It's called Coca-Cola ISEC. So ICE, ICEKK, I think. So just look at Coca-Cola ISEC in Turkey and it'll come up. So I think Coke owns 10 or 20% of that business, and it's a very high quality company. In fact, the parent company is at least 30-40% owned by 3G. The guys in Brazil that
Brazilian, yeah.
So they own a significant chunk of the parent. The parent of this company is a very high quality group. Okay, because you can imagine anyone Coke has gone and bred with, etc., would be one of the blue chip groups of the group. And so they are the only Coke bottler for Pakistan. So they're not just in Turkey. They're in Turkey and they're in a bunch of the other Central Asian countries. And it's a great business. It's a really if you own a Coke bottler anywhere in the world, the odds are very high that you're generating 15-20% return on capital, and it's a very stable, great business.
Mm-hmm.
And but in Turkey, this thing trades for nothing. It trades for 8 or 10 times earnings. It's half the price. And now the thing is, the currency and the inflation doesn't matter, because they will just raise prices the way, I mean, if inflation is 20%, their prices are going to go up 20%. So they're not really, it doesn't really affect them that there's a high inflation rate or whatever.
But you're saying if the currency loses 20% value to the dollar, they'll increase.
Irrelevant, yeah. Because they will just raise their prices, and you can look at the history of the business. And so there are some businesses which will get hurt by inflation. Okay, there's a lot of inflation. So if you have a business which has a lot of future capex, those future capex become expensive, it gets hurt. There are other businesses where the capex has happened in the past. Let's say I own a brand new steel plant, which I just finished making, and now the next 10 years inflation is crazy. Well, all the future people who build steel plants, it's going to cost a lot more, and steel prices are up. So I'm going to make supernormal profits because I've already done my capex, right, in old dollars.
Mm-hmm.
And so I studied the inflation issue carefully with Turkey, and I looked at specifically bets where the currency is irrelevant. It could be seashells that we are using for currency in Turkey, and it wouldn't matter. So Coke is an interesting business because if you think about a thermonuclear event, which takes out, LE, like, extinction level event, which takes out 95% of the global population. Okay, let's say 95% gone, few hundred humans left. Somebody somewhere will restart a Coke plant and Coke will start selling again. And the currency may be seashells or whatever, but a certain amount of your labor will be converted into an 8-ounce serving of Coke. So what I'm saying is that Coke is a business that would transcend a thermonuclear event. Okay, very few businesses can transcend that, right? And so there are businesses in Turkey which have these types of characteristics. It's really not subject to a lot of the noise, if you will. And so Coca-Cola ISEC is one. There's another company which is I mean I when I first invested in this business in 2019, it's called Resas Logistics, and so this was a $19 million market cap, US dollars, and they are the number one warehouse operator in Turkey. So Alibaba, Carrefour, Amazon,
Mm-hmm.
all these guys, IKEA, these are all their tenants. It's like 99% leased. The liquidation value of that business was north of 500 million. Okay, so 19 million market cap, liquidation, not
Yeah.
and the net value could be close to a billion. I couldn't tell. I could tell it was at least 500 million. And I spent an afternoon visiting all the warehouses and all of that. So my main concern was, is the whole thing fraudulent? What's
Yeah, it's a corporate governance.
going on with the promoters, what's happening here, whatever. But I couldn't find anything wrong with it. The only thing I could find was that these gamblers were going in and out of the stock every few hours. And so we invested $7 million. And for $7 million, I got 1/3 of the company. Okay. And so now I'm like a promoter. I'm like, no desire to ever sell that stake. Now the company is worth like 140 million. Okay. So now, I'm giving you all dollar prices, right? In dollars, I'm up about 7x in about the last 2 years. In lira, I'm up some ridiculous amount, but that's irrelevant to me.
Right.
So we had crazy inflation in the last 2 years. We had crazy devaluation of the lira. It made no difference. The investment actually worked extremely well.
Well, and the customers are abroad.
No, and also the capex was already done.
Yeah.
So they were saying, like their promoters were telling me that they used to buy steel, whatever steel they used to buy at 1,000 lira is now costing them 8,000 lira. Okay, steel prices in lira, because they've gone up in dollars. In lira, it's gone up a ridiculous
Even
amount.
more.
Yeah. So they said that if we were to try to recreate our warehouses, rebuild them, it's close to about $80 to $100 a square foot to rebuild them. They've got 12 million square feet. It's really simple. This was a really simple math. 12 million square feet, liquidation value or replacement value was about $1 billion, 200 million of debt. So it was 800 million.
Right.
And
it still trades for a market cap of 150, you said 140?
Now it's at about 140 million. And it's still cheap, right? Because still has a huge discount. And the thing is that the father-son that run this place, they're really smart operators. So I know that in 5 or 10 years, that 800 million will be 2 or 3 billion. I know that they'll do, because they're just really smart about how they operate. And so, one and done. It's like, we're not selling this in 3 years, and we're not selling it because up 7x or anything. And there's no tech. This is not Facebook, okay?
Yeah.
And very basic business run by some pretty smart people. And the reason for this is that nobody is really so $20 million. No institutional investor would have spent even 5 minutes on it, right? I mean, it's just way off the radar. Even when my friend was taking me to see the business, I said, why are we going to see? When I went to Turkey, this was really, it has to be one of the most, I mean, I should be paying for these trips instead of getting paid. Okay. So we were going to see a business, and this friend of mine in Turkey, who's my analyst, I just told him when I was first going, I want to just meet all your portfolio companies, because he's a very, classically Graham type investor. He said, oh yeah, it'll be great. I said, let's just go to all your portfolio companies, right? Because you already put money there. So I know it's already passed one filter. So we were going to visit this bank. And he said, Monish, I just want to give you a upfront before you go in, is that the PE of the bank is 0.1. Okay.
Like that was too high or something? What was he trying to get at?
0.1, okay?
Yeah.
Their earnings in 1 month were equal to the market cap.
That's crazy, yeah.
Okay? So I said, what kind of fraud place are we
Right,
going? right. I said, what do you? He says, well, there's a little bit of hair on it. Let me explain the hair. I said, yeah, please explain the hair to me. Okay. He said that they were illegally doing money transfers in violation of UN resolutions to Iran. Okay. And they got caught. They got caught doing it. So the US got very pissed off. It's one of the largest banks in Turkey, Halkbank. Okay. So the US got really pissed off. They sanctioned the bank. Okay. And basically were, going to come down hard on them for all this crazy stuff. Then their CFO of the bank was, had come to the US to vacation. Okay. In New York, they picked him up and they put him in Rikers prison. Okay. And so he was in prison. Erdogan is talking to Trump to release the guy. Okay. So all this stuff is playing on. In the meantime, there's the stock. Okay. The stock's at 0.1.
Stock's going to zero, yeah.
So I told my friend, listen, some things have too much hair even from me. Okay. I can't deal with this. I can't deal with, embargo, violations and I said, I have no idea what's going on. So I took a pass, but it was a hilarious 1-hour meeting with them because I'm doing numbers with them, and it's a respectable place. It's a normal, respectable place. And the poor CFO, it was really the CEO and chairman who were playing these crazy games. The CFO had nothing, but they wanted somebody. They wanted somebody they could use the pawn. And I think they now, after a few years, they finally let him go.
Yeah.
And such. So what I'm saying is that it was so common when we were visiting companies in Turkey. I mean, this would be like, Buffett and Munger in the 60s and 70s. The valuations, the pricing, I think that's the kind of market where what you do is you go for the highest quality. You go for the very highest quality because you won't pay up. And then you want to run those. You
just own them forever.
So to me, there is no market on the planet at this time that I can see that can match, because you have crazy people running monetary policy there. They have crazy inflation, they have crazy interest rates, and no one wants to go there. And those set up the conditions for some good returns.
So speaking of companies that are on people's radars that you do like, and arguably more accessible. I think the issue with Turkey is most people can't invest in Turkey. They don't have brokerage accounts set up there. It's complicated. What are some names that you like that an average investor could invest in that you think are mispriced?
I mean, some of these have changed in price and value, but about a year ago, I invested in Seritage Growth Properties. which was a spin-off from Sears with all the real estate assets, and that had collapsed after the pandemic. It took a 80% hit on stock price, etc. And so they're coming back. I think it's more than doubled and so on. I'm not sure it's a buy at these prices and such, but it was definitely very compelling a year ago. I mean, if you look at my filings, you can see that we have a position in Alibaba.
Mhm.
And
Yeah,
but
we'd love to talk about Baba because that they're in the news all the time, and they're competing head on with kind of U.S. big tech. They also have Chinese tech to compete with Tencent. So, what's your overall thesis with Baba?
well, it's an incredible business. I mean, just if you look at Baba and Tencent and kind of where they're at, and the ecosystem and the moat and what they control, and all of that. Look at the tailwinds from China. I mean, there's a lot to me to like, even more than the large US tech, just because I think that the tailwinds are so much stronger, and there's some serious barriers to entry. On the other side, it cannot do what Resas can do. What I'm saying, I buy a 20 million market cap, which has liquidation value of 800 million. That's a 40x.
Right.
And it's a 40x with no future value creation, just the arbitrage of price and value. I think here there is obviously going to be much larger revenues and profits and such in the future with all the different things they have going on. But you're starting from a very large base,
Mhm.
right? So 600 billion plus market cap. It's very cheap. I think Baba is one of the cheapest plays out there.
When do you think the Chinese regulatory issues? I mean, do they ever get past those, or do you think that's just part of doing business in China?
I think Alibaba is a crown jewel for China, just like Tencent is a crown jewel for them. So I don't think they will want to do things. These are the plays that have the possibility of global footprints, that they can get there. So I don't think the government is going to take an approach which is going to kill the golden goose, if you will.
Mhm.
So my take is they've extracted their pound of flesh, and they've sent a pretty clear message who's in charge, and such. So I don't really expect much more than what we've seen already. Also, the other thing with Alibaba is that in the long term, I think a lot of the value creation for them is cloud, which is non-existent from an earnings perspective today. They have some scale, but they're the number one player. But I think that when you look at Amazon's numbers, and Amazon's numbers with cloud are somewhat misleading because they dump their internal cloud expense in there. So actually, 50 billion revenue and 15 billion net income is actually understated. So I think they're making more than 15 on that, because they're growing as well. They're investing in all the future growth. So the cloud margins are incredible. And the issue with the cloud is that very few people can play. I mean, in the US, the game is for the most part over. You've got the players, and they will. It's hard to even see them even changing the position they're in.
Have you looked at Baidu at all, as far as Chinese names go? Just kind of post Archegos blow up, was that something on your radar?
Yeah, I mean, I think that to me the DNA of Alibaba and Tencent is what is unusual. I think Alibaba and Tencent have very unusual cultures and DNA.
Do you prefer Baba to Tencent?
They're both really good businesses. I think Tencent is interesting to look at through a Naspers lens.
Yeah.
Through the Prosus Naspers lens. I think that's a good lens to look, because you get good discount if you go through from
Do,
there.
do you own Naspers as well?
I cannot comment on things that not in the public domain.
Okay.
I like
I wasn't sure if it was,
I
but
like Naspers.
but you like Naspers, yeah.
I like Naspers. I think Baba and Tencent are similar, but they're also very different.
Mhm.
Tencent has this bazooka they carry on their shoulder called WeChat,
Yeah.
and they can fire that bazooka at will. And I mean, you look at a company like PDD, they just fire the bazooka and PDD's, suddenly sales are through the roof, and so Tencent has a pretty interesting ability to scale up a range of businesses.
Well, and don't they own like a third of Sea Limited as well? Yeah.
They have, I mean, their investment portfolio is incredible.
It's incredible, yeah.
Yeah, I mean, there's a lot of stuff there, which is going to be huge in the future. We just don't know which ones. That's why I think those are good plays, because that's a great basket.
Right, and how would you rate the American competitors? I mean, just going through the big tech names in the U.S. How do you view them vis-a-vis the Chinese names?
It used to be that the Chinese were copycats, and now the US is behind. And I think companies like Facebook, they have their marching orders. I mean, they're pretty much looking at China and trying to clone what they have there. So it's actually flipped. It's flipped the other way. So what used to be that the Chinese were just looking at what was there in the US and mirroring it, then they've innovated beyond that. And now what they have, I mean, the payment systems in China are way more advanced than here. All the common, because they leapfrogged, right? So just like in India, they leapfrogged landlines. They went straight from no phones to mobile to smartphones. The Chinese have gone from no retail to straight e-commerce, right? They skipped the malls, they skipped the retail. So there's a lot of skipping that's happened in China because of the way the growth and development of the country has taken place. And so that movement and a lot of these apps, the Chinese apps have no US equivalent. We don't have.
Well, I think what you were saying was that's exactly what Facebook's trying to recreate now. And they're in China, you have these super apps. In the US, you have kind of like wannabe super apps, but there's so much more regulatory red tape to, like, you saw what happened with Facebook and their digital wallet launch last year, like, got completely botched by the government. They're trying to restart that with Diem, but
but what I'm
China,
saying,
it would have just happened.
What I'm saying is that the US has a lead on cloud.
Yeah.
We're ahead on cloud for now, and but on most of the other stuff, China's ahead. It's technologically ahead, and even the consumer behavior is ahead, and so US tech is very smart to try to clone as much as possible of that, to the extent that they can. They've got their hands tied behind the back on many fronts, just because what would be legal in China would not be legal here.
Yeah,
so, but I think the large Chinese tech, because of the tailwinds, because of the size of the market, because of future GDP growth, all these other things that are going on, and quite frankly, the modesty of the valuations, is a great place to be.
What is Baba trading at right now on a PE basis?
Like 20.
20, yeah.
But the thing is that 20 has a lot embedded in it. They have a lot of money losing businesses that are within that 20. So actually the real multiple is much lower. Yeah. And we don't know, the thing is, some of this is a black box. We just don't know a lot of stuff that's inside, but there's a lot of good stuff inside. And there's a lot.
So when you think about the Chinese names from a corporate governance standpoint, especially Chinese big tech, do you have any concerns at all about leadership at Baba or leadership at Tencent?
So these two companies specifically, I don't think they fit the template of typical Chinese businesses. Both these businesses from the very early days had international backers, and they've got what I would call enlightened leadership. And so if you drill down on the principles of Alibaba, for example, core principles that they live by, um, they are very transparent. It's a very core corporate mission. I think Jack Ma put in a lot of these principles and vision and mission into the business, and it's very deeply embedded because they will, for example, when they hire a new engineer, they'll take them offline 4 weeks to make sure they get embedded in the company's culture before they start working.
Interesting.
So,
Yeah.
And they're doing that for all their employees on a pretty deep basis. So I think that these businesses have learned that they are really global companies and they need to operate with a global set of rules. So they have been very good partners for their international investors. I mean, if you look at the Naspers and Tencent relationship, for example, it's a 20-year relationship. The Naspers BizDev team and the Tencent BizDev team in Hong Kong sits next to each other. They are constantly doing deals together. Mm-hmm. And Naspers sits on the board and all of that. So Tencent is a very global business from that point of view. And both these companies understand really well that to really make a lot of money and to be really successful, you have to play the long game.
Right.
You can't take a quick hit and run. So the core principles both these businesses are built around are wonderful principles. They would be the same principles like you would find at Amazon and others. So
yeah. Speaking of Amazon, have you looked at Coupang at all in South Korea?
I haven't looked at it in much detail, but some people have sent me write-ups and stuff, but I haven't studied it yet.
Yeah. On Amazon itself, is that a name? I mean, obviously, people kind of knock it on valuation oftentimes, but it is a little bit, especially with AWS, kind of a tax on the internet, just given how, literally every tech company relies on it. I'm just curious what your thoughts are on the growth prospects of Amazon.
It's probably a mistake that I'm not buying Amazon.
Yeah.
It's still day one.
It's a good way to look at it. Yeah.
I mean, when Jeff was leaving, he said it's still day one.
Yeah. Yeah. Well, he's also,
and I believe it's day one for them. I mean, I think it's an incredible business. I mean, the DNA and culture and kind of the innovation and things and where they're going. I mean, it's, most of the Amazon valuation is coming from the cloud. I have not been a big fan of a lot of their, direct businesses and all of that. I think the marketplaces are good, but shipping $8 items, with no shipping charge, etc., is not a way to make a lot of money. And so I think that their tailwinds from the businesses which have great economics, and there's many businesses they have that have great economics, and where the company can grow in the future. It's got a pretty incredible footprint.
Do you have any views on the trends in crypto, be it Bitcoin, Ethereum, some of the altcoins? Have you thought through how maybe some of this tech would impact your portfolio, if at all? Just curious to get your high-level views.
Divya, you would know a lot more about that than I would, but it's I would say a mix of outside circle of competence in terms of my understanding and strong likelihood of a bubble.
Yeah, but so you stay away from this stuff pretty much entirely.
I mean, look at Buffett with Burlington Northern and all his downside protection stuff, and then look at crypto. I mean, the thing is that you would have to have such a deep understanding of why there's no downside. And I have no such understanding of that.
Yeah.
You know?
Do
I
you
mean,
do
we
any?
saw it
Yeah.
go from 60 to 30. Can it go from 30 to 15 and 15 to 1? I don't know. Or does
Right.
it go from 60 to 500? I don't, no idea,
Yeah. But does the broader like movements uh, towards decentralized um, applications, decentralized ways of doing things, does that resonate with you at all, and
The,
maybe make you
the,
rethink?
the technology may have a lot of merit and they will probably find some uses and application, but I'm not convinced that crypto is a great application.
Yeah.
If you're going to have an alternative to a currency, stability becomes one of the most important things.
Hmm.
It needs to be pretty even. I mean, that's why we've seen exodus from Turkey, is because people don't like the instability. So you can't have a currency move 5, 10, 15% a day and be taken as a serious currency.
Yeah. Yeah. Has on the more political front, has Biden's tax proposal affected at all, like how you think about your portfolio or investing? I mean, one of the things that they're proposing is getting rid of, preferential treatment on long-term capital gains. I'm just curious, uh, especially for somebody who does have multi-year positions, how does that impact your thinking in terms of selling or not selling?
Well, I think one of the things that should change in the tax code is not on long term capital gains, it should change on short term capital gains. So if you want to get away from the gambling behavior, I mean, let's
Hmm.
take an extreme view. If you had 100% tax on short term gains, there would be a lot of behavior change.
Yes,
Right?
that's true. That's
And,
fair.
and if you went to even 70%, there would be a lot of behavior change. And those behavior changes would be good, I think, for society in general. Um,
Nobody's proposed that that I'm aware of.
I think short-term gains is where they need to focus. You
Yeah.
know, uh, Politicians focus on what gets them reelected, not what's best for us.
Right.
They're in the business of getting reelected. So that's what drives policy. But I think that it's not a good idea to have long-term capital gains and ordinary income both be at the same levels. I think that, and I don't think it'll happen. I don't think it's possible to get passed with the current House and Senate and such. So I think that we will end up with a higher capital gains rate than today, but probably lower than the ordinary income rates. And I think that's, generally speaking, that's a good thing. One of the big problems we have in the US is we create a lot of wealth, but it's been very heavily polarized, and it's getting more and more polarized. I mean, the pandemic did nothing but polarize wealth. The rich got richer, and the have-nots got even more hosed. And so in a rich society, there is a very good case to be made for very strong safety nets. So capitalism is going to cause, uh, dispersion and extreme wealth creation, and I think that's fine. That's good because we need incentives to grow and scale and innovate. But you need a counterbalancing force which provides better and better safety nets at the low end. So earned income tax credit, robust, uh, 2 to 6 education, great healthcare. So just a lot of the basics that people needs to be there.
But no, just as far as your own kind of investing goes, it doesn't sound like it changes your, let's say the turnover in your portfolio would probably
No,
not be
I
impacted.
think that for almost all investors, the interest, I mean, the tax rate is not going to drive much behavior change unless it's extreme, like my 100% short-term gains tax.
Right.
That will drive behavior change. But for the most part, it's not going to.
Got it. That makes sense. What advice would you give to somebody today who was looking to either start a fund or enter the industry and become a full-time investor?
Well, I think the litmus test is that how have you done so far for yourself with your investing, and has your own investing made you independently wealthy? Because then that in effect proves that if you're any good at investing, even with modest capital, you'll end up with significant money in 10 or 20 years if you're good at it. And so I think the base requirement should be what have you done so far with your own funds, and are you independently wealthy? And if the answers there are yes, then that's a good building block to build on. And yeah, it's possible that might make sense to manage money for others.
Is there a single personality trait that you think is most critical to being good at investing? And maybe you've touched on this a little bit earlier, but
Yeah,
what's your kind of,
if
you
you
look at your own personality, what would you say is maybe the trait that gives you an edge?
if you love watching paint dry, then this is for you. So if you can, Pascal used to say that all man's misery stem from his inability to sit quietly in a room alone and do nothing. And I would just paraphrase Pascal to say all investment manager miseries stem from their inability to sit quietly and do nothing for long periods of time. And so I think that's the holy grail is if you can, not have a trait which is a call to action, call to trade and such, then those are great traits.
Do you think intelligence is necessary to be a great investor, or is patience truly the main virtue here?
Once you get past carrot IQ,
okay.
or let's say let's not say carrot IQ. Once you get past 110 or 120, I think it's irrelevant. I think patience and I would say that to me the heroes of investing is someone like Naspers. I mean, that guy Koos Becker, 2001, he invests 46 or 49% stake in Tencent for 32 million, and he bought the stake from Li Ka-shing, who's a smart investor, and it's this boring newspaper company, and Tencent goes IPO in 2003 and they don't sell anything, and then it becomes $1 billion position, they don't sell, $10 billion position, they don't sell, $100 billion position, they still don't sell, and rides it to like an 8,000x so far, and they've hardly sold. I mean, the first sales they had were in 2018. Where they sold a 2% position. But even today, after they've sold a total of 24.5 billion of Suntech stock. But if I owned a share of Naspers, my look-through shares of Tencent are unchanged from 2017 till now, even though they've sold about 13-14% because they bought back more of their own shares and so on and so forth. So to me, Koos Becker, who is a hired gun, he was not from the family or whatever, makes this call, and also makes the call that he said, I don't want a base salary and I don't want a bonus. I want all my comp and options, right? And he's worth like 2.5 billion now. Actually, he's worth 5 billion, but because Tencent is a 50% discount, it's only 2.5. It's actually worth what, 5 billion now. And so, a hired gun does that. And so he faced tremendous pressure internally and externally to lighten that stake, and didn't bend.
Just never buckled. Yeah.
Yeah. And to me, that's just incredible discipline. And, one of my friends spoke to Naspers investor relations, and their response was, quote unquote, we will never sell Tencent. Okay, I'm pretty much, I think the way they view it, they view themselves as the founders of the company.
Yeah.
Okay, and they can see I mean, if I look at the business, if I look at a business like Tencent today, in many ways it's embryonic. It's a large business, but
Well, they have this portfolio of VC bets that is so extensive.
yeah, but even their core businesses. I mean, let's take Tencent Cloud. Tencent Cloud doesn't exist today. They're planning to dump 70 billion into it in the next 5 years. Okay, and I wouldn't bet on them failing in the cloud.
Yeah. Yeah.
Okay, and if you dump 70 billion and you want a 20-30% return on that, you're going to be banging out 10-15 billion a year on that. And that becomes really valuable. I mean, if in 5 or 10 years, Tencent has a 20 billion a year cloud business, that's a very valuable business.
Absolutely. Is there a never sell business that you like that's US based?
Well, I only have 2 US positions. I have Micron and Seritage. And
Yeah.
I don't think either company, I like both the businesses a lot.
Yeah.
Micron actually, every time a data center opens, 20-30% of the entire spending on the data center comes to the memory guys. Okay, so it's a very significant tax on data centers, which is great. And so you said Amazon is a tax, and then the memory guys are a tax on Amazon.
Right.
So,
Yeah.
But it's a high capex business, and it goes through cyclicality and so on. So I don't think it's a set it and forget it forever kind of business, but it's a nice business. I think with Seritage, at some point, maybe 5 or 10 years from now, it may look different. But neither of them, I think, are. I would say that I feel a lot more about permanently holding Reysas in Turkey, for example,
The
more
Coke
than
Papa.
any of the US businesses. Because, the thing is that there I can just clearly see that we have emerging economy and a lot of nice businesses in there, and
Yeah.
take it from there. So there's not that much I can find on the radar at this point. I think the large Chinese tech is interesting right now. Turkey is interesting right now, but I don't think there's a whole lot that I find that's easy to say this is a no-brainer.
Well, maybe after this interview, we'll trade a few names over email.
Right, sounds good.
Manish, this was incredible. Love the anecdotes. I feel like you've nuanced my view on Warren Buffett quite a bit. But we'll have to follow up at some point and do a look back on how some of these names performed. Maybe in 2022, we'll see. But thanks again for the time. I've learned a lot, and looking forward to keeping the conversation going.
Absolutely, Divya, always a pleasure. Thank you.
Thanks, Manish.
Okay.